Well, hello everyone and welcome to Moementum channel. My name is Mo, and in this video, as part of our weekly series, investing in the stock market through a small account, trading account with Wealthsimple account, this Wealthsimple Trade, we are planning to grow this account from a mere $5,000 all the way to $250,000. So as part of those weekly reviews, we are going to walk you through the performance of our account, what have been our stock purchases over the span of the past week, what are our intended stocks and ETFs that we are going to add to our portfolio over the span of the coming weeks, and any dividend income, as well as any other reviews that I can provide with you and kind of impart some of the knowledge to yourself and hopefully inspire you to also get started with investing in the stock market. Like you can see here on the screen, we are displaying our stock investment account with Wealthsimple Trade. It's a non-registered account. The total value of our account is sitting at $16,218. Our 1 month's return is showing a negative 4%. This is mainly due to the fact that over the span of the past months, and in fact, even most recently, the stock market has had some pullbacks. And as a result of that, you'd notice here that we are showing a negative return of 4% for 1 month. Our 1 week return is showing to be negative 1%. The last trading day, though, was a positive 1% return. And if you look further into the 3 months return, it was showing a negative 2%. But overall, our 1 year return is showing to be 35%. We had a much better 1 year return over the span of the past week or the weeks before that. I remember at one point we were at 44%, but given some of the pullbacks in the stock market, we are at a much more humbler overall return for the 1 year, and it's showing to be at 35% overall. Okay, let us go ahead and take a close look at our overall portfolio before we walk you through our stock purchases. What do we have in our current stock positions and portfolio? You notice we are maintaining our 6 shares of Apple. It is showing an overall return of 9.87%. As for Blink Charging, we are showing a negative 3.23% for our 2 shares. Bristol Myers, we have 7 shares and it's showing a 25% return. Bank of Nova Scotia, we own 15 shares and it's showing a 23% return. Salesforce, we have 3 shares and it's showing a positive 6% return. Corsair Gaming, we have 9 shares, it's showing a negative 14% return. Emerge Arc Fintech Innovation ETF, EAFT, we have now 12 shares and it's showing a negative 14+%. EAGB, or Emerge Arc Genomics and Biotech ETF, we have 22 shares and it's showing a negative 18%. And one more of Emerge ETFs, we have Emerge Arc Global Disruptive Innovation. We have 31 shares and it's showing a negative 19.5%. These Emerge ETFs definitely are at negative rates here. As you can see, the returns are almost definitely double digit, all of them. So those are some of the ones that we've been adding to our position, and we are continuing to add more in the weeks ahead because we want to take advantage of the dollar cost averaging, and they are exchange traded funds. So from a risk level, tolerance level, I think it's not a specific company that we are picking, and we feel a lot more comfortable with adding more shares and taking advantage of the lower prices of these ETFs. Next, we have 4 shares of Gilead Sciences. We have a return of 6.93% positive. Harvest Clean Energy ETF, HCLN, we have 15 shares and it's showing also a negative 12.82%. With HCLN as well, similar story. We intend to add to our shares. We plan to, in the weeks ahead, to try to take advantage of the dollar cost averaging. Neo Lithium Corporation, we have 75 shares. It's showing a negative 15.34%. Pfizer, we have 21 shares. It's showing a positive return of 22%. Palantir Technologies, we have 10 shares. It is now showing a negative percent of 8.73%. Pizza, we have 5 shares. It's a dividend paying company, monthly dividend paying company. We had made a video on this company a few weeks ago, so be sure to check out that video if you haven't done already. It is showing just a fraction of a point percentage negative. It's showing a 0.19% return negative. Qualcomm, we have 8 shares. It's showing a positive return of 7.59%. We were at much better returns, but again, Qualcomm has had considerable pullbacks over the span of the past weeks. Real Matters, we have now 156 shares. It is showing a negative 0.65%. Royalty Pharma, we have 29 shares. It is showing a negative 6.95% return. Royal Bank of Canada, we have 5 shares. It's showing a positive 22.72%. Toronto Dominion Bank, another Canadian bank, we have 7 shares. It's showing a positive return of 26.10%. We have Vanguard FTSE Canadian Capped REIT Index ETF. Here we are showing a positive return of 13.81% for our 12 shares. For Verizon Communications, we have 10 shares and it's showing a positive return of 5.30%. We do have two more index ETFs, XDV or BlackRock Canada iShares Canadian Select Dividend Index ETF. As the name suggests, it is a dividend paying ETF. We have 5 shares and it's showing a return of 26.19%. Decent return. 𝐋𝐈𝐷 is one of the Canadian Information Technology Index ETF. It definitely is a little bit more riskier, but the returns also tends to be higher over the longer span of time. As we know, information technology has not done so well most recently. It has had huge pullbacks. While we were at the positive return for 𝐋𝐈𝐷, right now we are sitting at a negative return. We have 16 shares here and it is showing a negative 1.32% return. So that's specific holdings that we have within our personal accounts and in terms of our their returns and how many shares we have. If you look at our dividend income for our personal portfolio over the span of the past week or so, the most recent dividend income that we had 28 cents dividend from Pizza. They do pay a monthly dividend, as I alluded to earlier. VRE, we got paid $1.05 on May 10th. We also got $7.74 in the month of May from Verizon. We got $4.22 from Bristol Myers in the month of May. And that kind of concludes all of our dividend income so far in the month of May at the time of recording this video. We did not deposit any new money into our portfolio and account here, but we do intend to add a little bit more funds to our account so we have more available cash, so we are able to actually buy some of those additional index funds and ETFs that I alluded to earlier. And I will probably dive into it a little bit further as we talk about. But if I show you our stock buys, what we bought over the span of the past week, keep in mind we have not sold any of our stocks or ETFs. That's not our intention. We definitely do not panic at the time when the stock market tends to poorer. In fact, we try to take advantage of that and add more to our quality shares of different companies or ETFs that we have in our holdings. You see here we have a number of pending buys. So these are the ones that I've already put a limit buy order at the prices that I'm comfortable with. For the most part, a lot of these prices are definitely at the much lower prices to what price they're currently being traded for. This way, assuming some pullbacks, at least these orders hopefully would get fulfilled, and I'm happy with that purchases to take advantage of dollar cost averaging. So you'd see here on the screen, and we'll just scroll slowly further. The ones that are in USD, you're going to see here the Canadian equivalent of it. For example, Verizon, the purchase price, the limit buy price is $50 USD, or equivalent of roughly 61.70 Canadian dollars. But enough of that. Let's take a look at actually what stocks we bought over the span of the past week. So you see we bought HCLN at the price of $13.32. We bought EAGB at the price of $19.87. We bought Real Matters stock for the price of $15.90. We bought one more share as well of HCLN earlier on at the price of $14.44. We bought EAGB. This was earlier on, not last week, but earlier on. You'd see we bought it at $20.75 compared to $19.87 that we bought more recently. So obviously the price of these stocks and ETFs continue to go down, but we'll try to take advantage of that and gradually add to our shares. So we don't really buy drastically in numerous numbers, but rather one or two at a time and gradually taking advantage of those dollar cost averaging, because the stock market has been quite volatile recently. So it's really hard to predict. So if we have some funds on the side, we can buy them gradually. And if the prices continue to go down, add more. If some other stocks that we didn't talk here necessarily about and that are on watch list or currently are doing better, but we are seeing some pullbacks, we might add to those so that we balance out the holdings that we have in our portfolio. There you have it, folks. A quick review of our overall holdings here in this stock investment portfolio that we have with Wealthsimple Trade. As I mentioned earlier, the ultimate goal for this portfolio is to get to $250,000. The plan is within the next several years. Hopefully by the indication and really the aim is by the year 2030, you could get to that point. But we know this is going to be a difficult way ahead of us. Definitely need to be adding to our holdings, add to our funds here, and gradually, of course, taking advantage of the compounding interest that you get through investing in quality stocks or ETFs through the stock market. Let me know what your thoughts are about any of these stocks or ETFs that we walked you through this portfolio. Do you have any of those in your own stock investment portfolio? What other stocks or ETFs are you adding to your stock investment at this time? I would love to hear from you. So be sure to leave us a comment down below and let us know what they might be. I hope you found this video beneficial and you gained something of value from it. If you did, please be sure to give this video a thumbs up and share it with someone who might benefit from the video. It really helps us a lot with growing this channel and reaching out to a lot more like-minded individuals who want to take advantage of the stock market as a great wealth generation avenue and tool for them. With that, thank you so much for watching this video. Be sure to subscribe to Moementum for more videos about investing in the stock market, cryptocurrencies, as well as learning more about financial planning and financial education. Thank you, and I hope to see you next time.